Welcome back. The stock of the day continues to be Shriram Finance. MUFG bought stake in the company 20% at 840 rupees. And now in 2 days, Shriram Finance has gained 100 rupees above the deal price. 5% gain on Shriram Finance. Now, the question is, after this kind of a run up and re-rating, how does it compare with its closest peer, Chola? So, Gaurav has done some analysis on that. Gaurav.
Well, yes, MUFG is going to invest around 39,600 crores in Shriram Finance for 20% stake. Now, if you look at this amount, it is actually the largest FDI that Indian financial sector has ever seen. And at the same time, even if you look at the valuation at 841 rupees a piece, it translates into 1.9 times price to book value, which is again at attractive valuation as per the comparison with peers if we look at the NBFC space. In fact, after this, we saw brokerages turning bullish on Shriram Finance for three key reasons. First is that higher growth. Second is the lower cost of funds, and third is again reasonable valuation. In fact, we have got a bunch of brokerages like CLSA, IIFL Finance, Jefferies, DAM Capital. All of them actually increased the target price above 1,000 rupees as high as 1,200 rupees a piece for Shriram Finance. But after that, on the flip side, we saw Cholamandalam Investments actually losing in trade, and there are some key reasons. First is that if you look at the valuation gap, Cholamandalam always had that valuation premium over Shriram Finance despite having a smaller book if you compare the AUM. And there were key reasons. First is, if you look at credit rating and the cost of fund, Chola always had this lesser cost of fund, and even if in terms of credit rating, let's understand, for example, for ICRA and for NCDs, which is non-convertible debentures, Cholamandalam had a AA plus positive rating, and at the same time, for the same NCDs, Shriram Finance had AA plus and stable rating. That is something that the differential actually was there, which actually brought the cost of funds higher for Shriram Finance. Second is that the growth guidance. If you look at Cholamandalam Investment, they are guiding for growth of around 20 to 22%. Remember, they have reduced their growth guidance, but it is still at 20 to 22% versus Shriram Finance, who is currently guiding for 15 to 17% growth. So the growth was also higher for Cholamandalam Investment. Third is that if you look at ROEs, for Chola, they trade the ROEs at around 18.5% versus for Shriram Finance for the first half of FY26, we saw ROEs settling at 15.4%. But what is going to change after the deal as per brokerages, also as per the fundamentals? First is that cost of funds. Now, multiple brokerages believe that the cost of fund is going to come down, and the reason being that first is that fresh equity which is going to come up, and second is that because of the fresh equity, we will see some credit upgrades. In fact, if you look at IIFL, they expect 100 basis point of decline in cost of funds, and at the same time, Jefferies, they believe that this will actually make a case for credit upgrade as high as AAA rating. Second is that higher growth expectations. Now, brokerages are expecting higher growth. In fact, we saw Nomura, who is expecting around 20% AUM growth from Shriram Finance going ahead, and at the same time, we also saw IIFL, who are expecting 18 to 19% AUM growth going ahead. Third is that in terms of valuation, despite having such a large deal, that happened at a valuation of around 1.9 times. Now, there is some differential in terms of ROEs, and ROEs will optically remain low for Shriram Finance, but brokerages still believe that they will remain in mid-teens for Shriram Finance. In fact, IIFL expects the ROEs to go as high as 14.5% and ROAs to go almost by 4.5% in the next year. So, definitely there is some room for growth in ROAs and ROEs as well. That is something which is actually hurting Chola Finance right now, because even at this price, Shriram Finance is trading at around 2.4 to 2.5 times price to book at FY27 versus Chola, which is still trading at 3.8 times. So the difference and the advantage which Chola had is somewhere narrowing, and that is the reason Street is not taking it in a good way. In fact, if you look at the stock performance in the last 1 month and 6 months, we have seen Shriram Finance going as high as 43%. But if you compare with Chola, that has gone up only by 2% in the last 6 months. So definitely, that is something which is hurting the sentiment and helping Shriram Finance grow further in a trade.
Someone's loss is someone's gain. Gaurav, thank you for that update there. Shriram Finance, new highs for the stock today. 950 now almost. Brokerages going up to as high as 1,225. There's potential upside of as much as 33% from Friday's closing levels. But of course, the stock already up 60% so far on a year-to-date basis. But of course, stay tuned, because the manager